Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm going solo to do a recap of an episode I did last year, and I'm updating it for this year, and that is making the case for buying Nvidia here in 2025. I made the case for buying it last year in 2024. How'd that turn out? It's a little bit on the iffy side, but you still have a chance to buy it here. I took a look at last year's podcast episode, which you can find on our YouTube channel. Just scroll down and look at the most popular videos, and you'll see it on that list. You have to kind of scroll over, but you will find it there because that's where I found it. And it has some interesting data in it because while the stock hasn't really done much in the last year, and it's actually had some big sell-offs like we saw in April of this year for Liberation Day and everything going on in the stock market with the tariffs, but it's bounced off those lows. But the interesting thing that has happened since I last covered this topic was that earnings continue to rise. Earnings and revenue, and the stock going nowhere in the last year has meant it's gotten a lot cheaper. So if I can make the case for buying Nvidia last year based on what we knew then about the earnings and the revenue and the outlook for AI and for their chips, then I definitely can make the case for it here in 2025. Now, some of you may remember that last year, I did not own Nvidia in my own personal portfolio, and I still don't own Nvidia. But I'm going to talk about two other stocks also on this episode that are in the AI revolution that'll give us a little bit idea about what's going on with Nvidia, because Nvidia hasn't reported earnings yet, although CEO Jensen Huang has been out and about giving various speeches, interviews, and other things. So we're getting some ideas, but their partners in the AI revolution have reported already. And those I'm specifically talking about Vertiv, ticker VRT, which I do own in Zacks Value Investor portfolio and my own personal portfolio. And they make the interiors to the data centers, the racks that hold the chips, the other accoutrement, let's call it, that goes along with the data center side. And they're on the servicing side of the data centers. You need someone to, get everything up and running inside the data centers. So they are a partner with Nvidia to make sure that those racks can be cooled for these sophisticated chips, because they do have a tendency to get hotter than even the regular chips. So there's a lot that goes on inside the data centers, and Vertiv is involved in all of that. It is a global company. Again, they've already reported, they beat and they raised again. So we already know that the demand on the AI side, while everyone keeps waiting for it to kind of fall off, it's not falling off, at least not yet here in 2025. And that was one of the big reasons I said to buy Nvidia a year ago, was because that demand was seemingly still staying strong. And now we know a year later, it looks like it still is even right now. Although, again, we haven't had Nvidia report yet. So we're going to take a look at Vertiv, and then we're going to look at Sterling Infrastructure, ticker STRL. That is also a company I own in Zacks Value Investor and also in my own personal portfolio. We bought it when it was much cheaper. So they do make infrastructure. They're on the building side, the construction side. But something that stood out to me when we added it to the value investor was two words: data centers. And that's still something that sticks out to me with Sterling. And I'll get to that in a moment too. So you have the chips, you have the people who are servicing and fitting out the interiors of the data centers. Then you have to have someone who's building the data center. So we're covering it all on this episode of The Market Edge. And then I am going to wrap it up with looking at Nvidia's numbers ahead of their earnings here and why I'm even more bullish than I was a year ago when I said a case could be made for it, even after the huge gains in the stock last year. And now it's because it is cheaper than a year ago, cheaper than 2 years ago. It's very attractive valuations here, even off the recent lows. So let's start by looking at a chart about what Nvidia has been doing since the last podcast episode on making a case for Nvidia. And this is a year-long chart. Let me make sure I'm scrolling down. Yes, 1 year, this chart. And the VOO down there in the red, for those of you who are listening, VOO is up 12.98% over the last year. So basically 13%. And the VOO is the Vanguard S&P 500 ETF. I like to use it on these charts. Everybody mostly knows what it is, and it's just kind of easier than putting in the index. So the VOO is up around 13%. And Nvidia over the same period, very choppy, up, down, is up 43.95. So 44% over the last year. But it does depend on when you bought during that time period. At certain points, you might be in the red. If you had bought last fall, shares are down. If you had bought last summer, you might be just about breaking even. So it is all dependent on when you bought within the last year. So let's look at the 6-month chart, and this will give you a better indication. Nvidia shares have been weaker than the overall market. So 6 months, you can see the VOO is down 1.6% in that period. And then Nvidia down 11.7% in the last 6 months. Over the last 3 months, almost the same. VOO down 2.9%, Nvidia down 3.3%. So not too terrible. We've got a big rally off of those Liberation Day lows. And then the 1 month chart, VOO now up 8.9% over the last month. So that's going back to April 13th. So that's after the pause was put in, but the Chinese tariffs were still going on a month ago. Nvidia up 16.5% in that period. So really coming up off those lows, which look like they were April 21st were the lows. And now we've had this big rally. So that's what's been going on with Nvidia shares over the course of these various time periods. But I really wanted to look at some of the others. Where do we stand with Vertiv? All of these sold off during the Liberation Day sell-off, and you had a really good buying opportunity in both Vertiv and Sterling Infrastructure. We stayed in them, even though they were hitting various stop target prices in the value investor, because the earnings were just too good. And eventually that has now paid off. So the monthly chart, I put it back up here. Sterling up 38% over the last month. Vertiv, look at that, up 50% in the last month off those lows, just really oversold. But let's move out a bit more on all of these and look at the 6 month. So 6 month, still a struggle for Vertiv, down 15.6%. Sterling down just 2%. Again, the VOO down 1.5%, and Nvidia down about 11.7% over the 6 month. And a year ago, 1 year chart, Vertiv up 12.7, VOO up about 13, Nvidia up 43, as I mentioned earlier, or almost 44%, and then Sterling up 48%. This chart is kind of crazy. All these colors are the same. I don't know why all the colors, can't they use green or something else for a couple of these? But nevertheless, it has been very volatile. Look at everything in the AI revolutions, the three stocks we have in that. And then the red line is the S&P 500, kind of, other than the Liberation Day sell-off, kind of just going its own way and kind of stable there. There's a few big sell-offs. There's this one last summer that's around when the Fed was going to cut rates or didn't cut enough, and the market was a little spooked there. But otherwise, a lot easier to own these than the AI stocks, up, down, up, down. But what this also tells me is you have gotten some really good buying opportunities. So if you think like, oh, it's run away from me, as I know many of you thought a year ago when I did this episode, then you were wrong, because there's been plenty of chances to get it even cheaper. And even now with the recent big rally, I still like these stocks. I'm a little more on the sidelines as a value investor with Vertiv and even with Sterling. And we're going to look at those valuations in a second. But I still do think the AI revolution's got some legs still. And these earnings are what's really driving it here. And that has not changed. Even with the tariffs and the trade war, the earnings outlook for the AI stocks is still really, really strong. So let's look at Vertiv first. So remember the ticker VRT, and I'm going to bring up the quote page on Zacks.com. And so we can just kind of look and see what is going on with the price and consensus chart and the valuations on Vertiv. So just pulling it up here, Vertiv is a Zacks number 3, so it's a hold. It's got the D for value now, because with this big rally, it has gotten more expensive. So at its peak, before the recent big sell-off, when it was hitting new all-time highs last year, Vertiv was trading around 40 times. And that was just way too expensive. It got sold off. It was trading down around 20 times. And now, let's see, with the 50% gain over the last month, it's now back up to 28.5 times on the forward PE. That's not as bad as it was, but it is much more expensive than just even a month ago. PEG ratio of 1.05. I'm liking that. Remember, a PEG of 1 means you have value and growth, PEG of 1 and under. And so a 1 is pretty cheap on the PEG side. That means the stock is not real expensive. And then just looking at the sales and EPS growth rates, we had 61% on the earnings last year in 2024, because it was just coming from these really low places. Then the AI revolution started in 2023. It continued in 2024. Now it's kind of leveling off a bit, but 2025, still 24.6% earnings growth expected. 2026, analysts as bullish, again, 23% earnings growth expected for that year. That's why I like these stocks so much. We are still getting fairly attractive valuations with that earnings growth still intact. And then looking at the price consensus and surprise chart, it continues to beat and raise. As I said, this was only 3.2% last quarter, but a beat is a beat. And then you can see the big wide consensus lines there, and a little bit of a downward track for 2026 here this year so far, but not so much for 2025, just people kind of getting in line with what the company said on this last earnings. So we've had a big rally here, but we're not anywhere close to these highs that we hit in 2024 and even just to start 2025. So I'm still liking Vertiv here as well, but much more expensive after this rebound. So that is Vertiv, a partner of Nvidia who's already reported these outstanding numbers. So that is VRT for Vertiv. Now let's look at Sterling Infrastructure, because this one is a little less known. They're not actually partnered with Nvidia, but In this last quarter, their big area that does the data centers is e-infrastructure solutions. That's what they call it. It now makes up 65%, I believe. Let me see. Yeah, now represents 65% of the e-infrastructure backlog are the data centers. So the backlog was up up 27% for e-infrastructure in the quarter to 1.2 billion. The backlog overall was up 17% to 2.1 billion. E-infrastructure solutions were up overall 18% in the quarter. Transportation, they have other areas, was up 9%. So that's nice. The one area that's struggling for Sterling is on their housing side, or they call it building solutions. They actually pour the concrete for residential homes in Texas, in the Dallas area especially, and that was down 14%. As we know, housing is struggling, not as many homes being built right now. That will turn around eventually, but for right now, they're just trying to get through it on that segment. And they've got the data centers surging, so it's countering that slowdown on the building solutions. So data centers, they did describe as, quote, very active, unquote. And again, it's now 65% of the e-infrastructure backlog. They are repurchasing shares. They repurchased 44 million, and they now have a net cash position of 329 million. So I'm liking all of that. They are doing some acquisitions. They closed on the Drake Concrete acquisition in the quarter. And their gross margins are up to now 22% from 17.5. Now they are a number 2, which is the buy. They're C for value on the style scores. That's not too bad. It's not the D like Vertiv, but they're not as cheap now that they've rallied this huge rally off of the Liberation Day lows. And so forward P, though, still pretty attractive at 21.7. PEG of 1.45. So still pretty low on the PEG side too. And then on this one, you can see the sales and growth on the bar charts. 2025 expecting another 38.5% on the earnings growth after 36.5 last year. And then maybe we see it slow down in 2026. We have 11.6% earnings growth right now. Still nice double-digit growth if it does slow that much. But just look at this bar chart. 2022 up 47, 2023 41.5, 2024 36.5, and now 2025 38.5. You can see a little bit decline in the revenues, however, expected for this year, a decline of 0.5. Earnings expected to rise based on those gross margins rising. So we're seeing some good numbers there, but a little bit lighter on the revenue side right here. Now, looking at the price consensus and surprise, they had another beat last quarter, also small, 3.2%. And then you can see the analysts raising both this year and next year on this chart for the consensus. So that's where we're getting those rising earnings. Analysts were thinking maybe it was going to slow down, but now the company's like, nope, it's not. And we're still building data centers like crazy. And we have this huge backlog. So it's still happening out there, even when you see these headlines of, Microsoft is pulling back and not going to build XYZ anymore in certain locations, or some of that is happening. There is going to be some change in what goes on, but demand is still strong for a company like Sterling. And I'm liking it here at just 21 times, even after this rally. Now, it's trying to get there. It's trying to get to its all-time high. It hit back here in 2024. It was a little stretch there, I have to say, but with this nice earnings report that just came in again and the rising earnings estimates here, it's not as expensive as it was a year ago. So this is what we're seeing in all of the AI revolution. It's still going on. So I'm liking Sterling still. STRL is the ticker there. But now let's turn to the one you've all been waiting for. What is the case for Nvidia? Here, ahead of its earnings report, everyone gets nervous ahead of Nvidia's earnings reports because they still think like this is it. This is when they're going to say things are slowing. But as I just mentioned, Vertiv and Sterling aren't seeing it, and especially Vertiv, which is in partnership with Nvidia. So as long as they are still red hot, I'm considering Nvidia to be, it's the number 3 hold right now. It's got a D for value, an A for the growth side, a D for momentum, and a C overall on the VGM. Did anyone expect it to have a high value score? I did not, but I do consider it to be a value here. So just scrolling down, let's see, forward PE is at 28 now. Nvidia has traded at like 40 times for many years, even before the AI revolution. And then the stock soared. The earnings were soaring too, but it had a hard time keeping up, and the PE soared again. Everyone was saying, oh, the valuations, but the earnings continue to compound, continue to rise here. And now look at the valuations, 28 times. That's similar to Vertiv. And yet we've got even stronger earnings growth here with Nvidia. PEG ratio, 1.16, almost at that value on the PEG ratio. I could almost justify adding this to the value investor because compared to its peers and what it's doing on the earnings growth side, this is a very attractive stock here for value investors. What was it a year ago? This is the interesting thing because I made a case for it a year ago as that earnings were really rising. So you can see 2024 earnings up 293.9%. And then 2025, this is a fiscal year, so it's a little like off compared to the calendar year. So we have these numbers in 2025 was 130%. And now we're only expecting earnings growth of 43% for this fiscal year, and then another 26% for next fiscal year. Oh no, only 43%. But given what it has already done, this is incredible growth for a company of this size. I've said it before and I'll say it again. We will never see earnings and sales growth like this by a company of this size ever again. That's my prediction. I'm sticking with it. And here you're getting it at a much more attractive price. So you can see on the price consensus surprise chart, they continue to beat and they have been raising, but these are smaller beats than back here in 2023, which were a little bit bigger, even though they were raising their guidance in this period, but then they would still go ahead and beat and raise. So analysts couldn't keep up. And now you can see the earnings growth expected for 2020, this year, 2026, and next year, 2027. On this chart, just very fantastic earnings growth. Now trading at 28 times. A year ago, it was trading at 39 times. So we were paying a lot more for the shares just a year ago, even though the shares haven't done much, earnings have done much. And this is why it's good to buy these types of growth stocks when they've had this kind of timeout where they're going sideways for a while, because it's allowing the earnings to really catch up with what else is going on. And the stock is getting cheaper as we speak, even though it's up off those lows. So it was cheaper before this big rally over the last month here, but still very attractive. Let's look at the detailed earnings estimates for Nvidia, because that's what we did last time as well a year ago. And scrolling down, so this fiscal year, earnings growth of 48%. Another crazy year, up to 194 billion from 130. This is, like I just said, things we'll never see again. And then look at the next fiscal year, 2027, 240 billion. That's over 110 billion up from last year in just 2 years' time. That's crazy. Another 24% on earnings growth. And then looking down here is interesting on the agreement where the analysts are adjusting estimates. So they did lower last 30 days for this fiscal year. 6 are lower and 5 are lower for 2027. And that is probably off of one of the presentations Jensen has been making. He's been giving some insights into what they're expecting, and maybe the analysts were just a little too bullish. Looking down to see what has been happening. So we're looking for 429 for this year, and that's down in 30 days with 6 estimates being cut from 441. So it's not exactly, terrible situation here for a $1 trillion market cap and a company looking to make 190 billion. 90 days ago, they were at 421, the consensus. So now they're at 429. So it actually has increased 8 cents in the last 3 months. Next year, we're seeing a little bit of a decline as well to 544 from 548 in the last 30 days with 5 estimates being cut. But this too is also higher from 90 days ago where they were looking for 527. So 527 up to 544 in the last 90 days, but some analysts adjusting in the interim, higher and lower, because we have one higher in the last 30 days for this year as well, for 2027. So we're waiting on this earnings report, but all of this is looking good. Let's look at the financial overview real quick. You will pay a higher price for the price to sales, of course, and even price to book. But look at the price to sales. It's come down. It was more outrageous. I think it was around 30 to 35 times price to sales. It's at 23 now. So no doubt you are still paying a lot for these sales. Price to book at 37. Neither of those is a value, but you're getting a good PEG ratio, PE of 28. Comparatively to Nvidia historically, these are pretty good and low. And so, yeah, I'm making a case for Nvidia once again here in 2025. Price to consensus chart. I'm going to put that up one more time to show you what it's doing, but look at the stock. Since a year ago when I made the case then, up, down, going nowhere, trading in this narrow channel, but earnings catching up with where the stock price is now. So it's much more attractive here on a fundamental basis. And all the people complaining, oh, it's overvalued. I don't hear that so much anymore. We're still waiting for a pullback of some sort in the growth trajectory, but it has been slowing a bit as we saw it, only expecting 26-27% earnings growth for next year, versus what we are seeing this year, another 43. I'm scrolling over to make sure I have those numbers right. Yeah, 43 this year, about 27% for next fiscal year. And the valuation's coming into line. So Nvidia still leading the AI revolution, much more attractive. You can look at some of these others that are also in the AI infrastructure. Look at some of the cooling companies, some of those like an Eaton and Modine Manufacturing. Modine has not yet reported earnings, so we're waiting on that one. It's ticker MOD. Also own it in Zacks. Value investor and my own personal portfolio for Modine. Eaton, ticker ETN. Let's see if they've reported. They have. Another beat for Eaton. Look at this price and consensus chart and surprise chart. Barely beat on Friday, May 2nd is when they reported, but a beat's a beat, even if it's 0.7%. So they only beat by a couple pennies there, but great chart. No misses in the last 5 years. And look at this earnings growth. just very stable. Nobody cutting there. Okay, you've sold me. I have to look at the detailed estimates. This is why I like Zacks.com so much, because you uncover these stories. So this year, earnings growth of 11%, next year, 13%. This is very steady, Eddie. What evaluations? PE of 26.8 on Eaton. Again, ticker ETN. I'm writing this down to include it in our summary here. PEG ratio, a little more expensive at 2.5. It's really come off of those Liberation Day lows as well. Darn it. I wish I had bought it down there as low as $250 a share. It looks like it's trading at $331 now. But still an interesting story. And again, this just shows if you thought you missed this trade, there have been buying opportunities in the last year to get in at a cheaper level. So again, if you thought, oh, I missed that Liberation Day low, stick around. You probably get another opportunity here at some point in 2025. But I'm liking all of these names. They are more attractive here. The trade is much more established now, and they are not at nosebleed levels like you might think will happen at the end of this trade when it really slows. Everybody's not in it, and everybody's not in these names. And I'm still not in Nvidia. So that's another question. Why am I not? I own Vertiv. It's a partner. So I feel like I do have exposure. They just don't make the chips. But I got Vertiv at a cheaper price. So I'm liking that. But now maybe I'm not. Maybe I need to get in here. So we'll see. Check in next year. I'm sure I'll be making a case for Nvidia again in 2026. And we'll see what's happening again a year from now. But I'm making the case. Nvidia here in 2025. And the other AI revolution stocks, don't miss out on those. So let's go over the tickers again. Of course, we had Nvidia, ticker NVDA. We had Vertiv, ticker V as in Victor, R as in Robert T, VRT. Sterling, which is making the data centers, ticker S as in Sam, T as in Tom, R as in Robert, L. Then we mentioned and took a quick look at Eaton. That's on the cooling side, but they do have a lot more than just data center cooling. But Eaton surging here, E as in Edward, T as in Tom, N as in Nancy, ETN. And then Modine Manufacturing. I own it in the Value Investor. I own it in my own personal portfolio. It's a smaller cooling play on the data centers. Ticker M as in Mary, O, D as in David. Hasn't reported earnings yet, so we're waiting on this one. But these are all great, interesting names, a lot of growth going on, and you want to keep them on your short list. And as always, be sure to subscribe here so you don't miss a single episode, so you get our making the case for Nvidia videos, and then you are up to date on everything going on with the AI revolution. I'm going to have some more AI stocks next week as well. Small cap AI stocks. Yes, I'm having Mark Zinski back on the podcast to talk about some ways you can play it in the small caps. And we've talked about this several times last year and to start this year, and he's back with some more AI stocks. So you don't want to miss that. Be sure to subscribe. Get us on Apple, on Spotify. We're on Amazon Music. Get us on YouTube. Get us somewhere. And I'll see you again next week with those small cap AI stocks.